Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today is Thursday, July 14th. Hey, we're almost to the weekend here. So, a lot of big news today, as well as we got news tomorrow. The big news will be tomorrow will be the CPI. So, be on alert. Today is also a pretty volatile day. So, let's go ahead and take a look here. We'll start off here with the jobless claims. And we're last week we had 427,000 jobs that were reported, or jobless claims that were reported. They're expecting around 420, so a slight drop, but it actually came in at 405. So that's promising, but again we're still over 400,000 in my opinion. This is still pretty high. We still need to get below 400,000 to make some differences. So let's go ahead and go with retail sales. Last month, the previous month, it was negative sales, so we had a negative 0.1. We were expecting it even worse a little bit, but it actually came in a little bit better, so that's good news. But let's take a look at if you take out the autos, because that's where you get these larger ticket items. It kind of obscures the sales percentages and everything. So the previous month we had a 0.2%. We were expecting 0, and basically that's what we got. So that's where we really need to watch is the exclusion of the auto sales, because it kind of manipulates, kind of like what we'll talk about with this PPI and CPI. We want like the core, because take out the volatility of those numbers here. So the core PPI, I'll touch on the PPI here because I didn't really have the room to put it in there. The PPI actually showed pretty nicely. The headline, that's the numbers that a lot of times you'll see the headlines. It was actually showing negative, and that's where you include the energy and more volatile, the energy and stuff in there. So when you exclude that, you get the core PPI, and this is on the wholesale level, the inflationary numbers. The previous month was at 0.2%, and we were kind of expecting to remain at 0.2, but actually it rose a little bit higher. So this is something we really need to watch on this, because what happens is many times they don't give as much credence to core PPI, because many times they'll take the hit and their costs go up, but they don't always raise their cost to consumers. So that's why tomorrow's report will be real important to watch, see if any of those costs to the wholesalers are passed on to the consumers. So let's go ahead and take a look at the headline news here. And the stock market is kind of mixed right now. Yesterday the Bernanke was on yesterday's during his testimony, and he's still going his second day of testimony before Congress today, and it looked like he was open to possible measures regards to stimulus packages, which is all the Congress is involved there. Sorry about the phone call here, guys. So we're gonna. So the stock market's mixed a little bit. Nasdaq's down a little bit. The whatchamacallit's up slightly. The Dow's up a little bit. But also a good news that came out is Italy's not messing around. Their legislature looks like it's passing through some austerity measures. So right now you gotta wonder if the U.S. will be next, because now Moody's talking about maybe downgrading our AAA rating, maybe possible downgrade for us. So that's obviously won't be a good thing. We really need to get that taken care of as best as possible. So. And then, of course, we're still watching the U.S. debt ceiling debate in Congress, if they're going to allow that to go through. As as they're saying, a lot of people may not get paid, from people on VA to disability to Social Security to Medicare. A lot of these may not get paid if they can't increase their debt. So nobody really knows exactly what will happen, but we don't. This is going to be obviously a concern. I think everybody at this point just wants something to get done and move forward. But obviously, we don't want to mess with our credit rating. So, those are extremely important. Otherwise, our yields will get more expensive for us to borrow money. So those are things we really need to watch out for. Sorry about that, folks. A little busy today, I guess, as you can see. So let's go ahead and take a look here at the bond market and see what interest rates are doing. We started off the morning about 12 basis points lower than where we left off. We had a nice little rally, as you could see yesterday, and we dropped a little bit, and we're down about another 3 basis points. We're about a par 94 right now versus 101.09 yesterday where we closed. I think we're going to kind of go see sideways. The news today, it wasn't exactly bond friendly. I think it won't be enough to really make us drop, but we could potentially see some corrections. The Dow may see corrections as well as the bond, as we saw a pretty big, as you see here, is a pretty big increase I think it was if my rough estimate was around 160 basis points. So we could see some profit taking here, where it could come down a little bit, and then hopefully we keep above the resistance here and work go sideways and go upwards. So to build that foundation. So interest rates are slightly off, a little maybe a little bit worse than they were yesterday, or were left off, depending on if there's pricing repricing. So we'll just call it a day, and I'll touch base with you tomorrow with all the the other big news that we're going to be going over with the CPI report. And again, folks, I am a mortgage planner. If I can help you with your home buying needs or with your refinancing needs, please feel free to give me a call. I can help you out with your mortgage needs. All right, folks, you guys have a wonderful day, and see you tomorrow.